boom, boom. Hopefully I'm live. I probably should put on my do not disturb. Do not disturb. Okay. Change this to live chat. Boom, boom. Okay, I gotta turn down the... Hit that thumbs up button. Is it early? It's 8:05. 8:05. I'm in the middle of my scans. So, levered ETFs, low cost Vanguard. I've got to open up the podcast. I'm going to do... Morning, Joe. I am going to do both the recording on OBS and GarageBand again. Oh, by the way, I'm standing today. I've been sent off to the upstairs bedroom. So your boy's going to be hunched over and talking into this mic. I've raised it up a little bit, and you shouldn't hear the pounding that you normally hear, but let's see. Okay, low-cost ETFs, nothing on there. Spider sectors, there is nothing that crossed up. No way. Let's see if anything from my not owned, my own personal watch list is crossed up. Ooh, a lot. Zoom. Do I send people into Zoom? I mean, that's just a nightmare of a chart. You know what? Let me... I do have to update this computer too. I'm going to go to Zoom. Zoom. I've got to move this down a little bit so that I do have, and we're going to move this over here, and then I've got that. Okay. Zoom. Okta Software. Their earnings already came out. ETHE. Futu. Neo. Sorry, their earnings already come out. Shift Technology. A lot of this is in the ARK funds too, so. HLT Hilton. Wow, look at that. I mean, after their earnings, they went from like 140 to 145. And then they've got their ex-dividend date. I mean, this one is 130 to 145 right now. Thermo Fisher. I trade this one in the 400s. I haven't been in it since. In and out. Looks like Shopify pre-announced or something. Let me see. Shop said something. They're up like 20%. Surprise profit. That's what it is. Plans to cut 20% of workforce. Shop. Morning, Brian. Workforce. Remember, I said get it around 40. Shopify, if you didn't know. Shopify. It's in the core portfolio. And I was scrolling through to say, did anything in the core portfolio really fly? And I knew Shopify had earnings today. I thought it was after the bell, though. Yeah, earnings per share. It says aftermarket. I guess they announced they announced early. But Shopify has been in this ascending wedge. You've still got time to buy it, although now You're going to open up at 54. And you guys will know, I covered this one so many times. And I said buy Shopify. So Pinterest I like. We can go to pins. They under 20 Pinterest is good. Here's the problem that you have with Pinterest. It's not making money. It's fairly expensive. Price to sales. That's what this is. So every dollar that they bring in, they spend $6. Their income minus 299 million. Let me see how much cash on hand they have. Cash per share $3.36. Where's the cash available? I know it's in here somewhere. I guess they don't have it listed. Exchange to growth, cash per share, market cap, sales. They're making $2.83 billion in sales. 16 billion in market cap. I mean, it's 4,000 employees. They got to cut that down in half, I think. Price to free cash flow 40. I thought they had cash available listed somewhere. I guess they don't. I know I saw it in here somewhere, but I can't find it. Average target price is 28, and it's trading at 20. The most recent ones reiterated. They brought the price down 34, 27, 30, 28, 21. Morgan Stanley's the only one that's even close. Elliott Management is kind of taking them over. They have had a lot of sales in these upper 30s, upper 20s, I should say. And it's not minor sales. It's millions of dollars that they're selling. So do I like it? Yes. I think Elliott Management is active in this one. I think they got in when it was, I want to say about $20. So if this dips, right now it's trading at 2103, closed at 2092, 2103. I like that one. I like it. Roku, on the other hand, I hate the Roku interface. I am not a fan of Roku boxes whatsoever. Their model, they're not making money. They got a market cap of $7 billion so again, Pinterest is worth actually more. They are losing $665 million. They have cheap devices that gain advertising revenue and affiliate revenue. So when you sign up for Netflix, when you sign up for anything on a Roku device, they get a piece of that. Here's a good article, 72 million reasons to buy Roku stock, from Motley Fool. You can read these. I go back to, do I use Roku? And sorry, I'd rather pay $100 for an Apple TV and use the Apple TV than use a Roku device. And here we can just, and when I say that, I go back to that. Here. Compare. We're just going to compare Apple to Roku. Simple as that. 5 year. So Apple, 5 year is up 278%. Roku's up 72%. For a hyper growth company like Roku, that should be if they had actual promise, that should be blowing away Apple. over 5 years. Year to date, they're about the same. I mean, Roku is up 31%, Apple's up 33%. Over 1 year, Roku's down 48% and Apple's up 5%. So where do I think your money is better put? I mean, Roku, in my mind, when they're losing that much money, where are they making this money up? The only place that Roku has available for growth is probably a purchase from somebody who's buying them. Google's not buying them. They got Chromecast. Apple's not buying them. They got Apple TV. Microsoft's not buying them. Microsoft might buy them, but they got Xbox. They got a platform for streaming. And they could probably, if Microsoft decides to get into the streaming game, they could launch it on other devices. What do they need a hardware device for? They don't. So I don't know who would buy them. Maybe, I mean, if Roku were smart, maybe they'd buy Peloton, and the Peloton app would be exclusively on Roku, so that you'd have to buy their actual device. Maybe that's something that happens, but I just don't see Roku having the money and having the long-term outlook that I think, again, price to sales. They're not profitable. They're losing $665 million. Earnings per share this year expected to go down by 311%. I don't know how that happens, but over 1 year it's down 311%. Next year they're expected to go up by 40%. I don't know where that's coming from. So, Brian, probably stay away. In my mind, I think Pinterest, if you're picking between the two, Pinterest is number one. I go back to, there's better places to put your money. So, Disney's under 100. Is Disney going to be under 100 forever? No. Cleveland Cliffs is back under 15. Is that going to be there? Bank of America is a $27 stock right now. I think in a good market, that's a $40 stock. Boeing is back at 200. That's a decent one to get. I just don't know when that one's actually going to break out. Meta's back at 237. You have an opportunity there. Moderna released their earnings, and they're up at 132. I mean, that was nothing. Microsoft's at 305. NVIDIA's back at 276. Qualcomm came out and just horrible results. Qualcomm's at 103. That's a $112 stock. There's what, 10%, 8%? Pinterest, I don't think is a bad one. I think Roku's a bad one. I think Kathy Woods is holding up Roku by herself. She keeps buying it. She buys it in big lots. So, Kramer, and this is what you have to learn about Kramer. Kramer knows what he's talking about a lot. He just doesn't make very good decisions. And then he comes on TV and he explains away his decisions by saying that, other people were wrong. Well, not other people. Dude, you were wrong, douchebag. I did put Zoom in there. Okay. Let me finish these scans. Then I'll go off. See, you thought I was going to change my mind, Brian, by saying Kramer, my arch enemy. Kramer is my Joker. I am Batman. He is my kryptonite when I am Superman. NASDAQ 100 Zoom's the only one. Wow. We're just not going to get a lot in this. S&P 100. Yesterday was a bad day. EMR. Emerson Electric. Boy, that's under the 200 day. It's a utility company, though. Do I care about these two? No. Thermo Fisher's just too high priced. It's done well. Let's look at the energy sector. Energy's going to come back. At some point, energy's got to come back, man. Energy's going to be the darling. My blood ain't for. I'm using a standing. I'm on a dresser. I should take a picture and show it to you guys, but I'm on a dresser today. And I need to prop this up a little bit more because I feel like I'm bending down, but I don't want it to block my view. We'll leave it like this. Okay. Let me go home and I want to check Insider. Wow. Franklin Resources, $12 billion company. This is a bank. Franklin Templeton, CEO. Look at that. Franklin Resources is buying at $4 through October and November. Look at all that. I'm going to put this in. What's this ticker symbol? Ben. Insider buying at $4 and now a huge buy at $10. But did they get it at $10? Now it's trading at $25. Yeah, they got it at $10 April 28th. But it wasn't trading at $10 on April 28th. About $25 million. I guess they issued investment advisor. That's an interesting one. Enphase Energy. He bought $10 million worth at about 165. And he's already down. Look at all these sales. I mean, it was clearly overpriced at 300. Everybody's selling at 300. What's their PE now? PE is still 45. I'll bring this up. Insider bought 10 mil. And this is, by the way, stuff that you guys should be doing. AAT, May 1st, bought $2 million worth. American Assets Trust. Look at this. Airbnb. The director, I think this is one of their founders, sold $40 million worth at 113. Director. Okay. We're going to put that up there too. Okay, so I've got everything that I need to go over. Boom, boom. We're going to go back to our strategy tester. Go to the 4 hour. Okay. I'm going to go to SPY. And let's do SPY. Add comparison. We're going to take that out. QQQ. DJI. Where's Tim? No, I don't want Dow. DIA. That's what I want. And IWM. And I think, and I'll put in Apple. We'll put in Apple. I want that. And I want year to date as we go into Apple. I'll talk about that. Okay. By the way, before I go into this, hit the thumbs up button and make sure the screen is captured enough on here so you can see. I may have to move my you know what? We're going to do this. Expand this. We're going to Safari. And now how do I get this smaller? We're going to get this a little bit smaller. There we go. Then I'm going to shrink this down. You don't need to see me. Actually, I want this a little bit larger. Put that up there. And me. We're going to shrink me down a little bit. There we go. I think that might be good. You know what? Maybe I want this. Is that good there? That's good there, I think. We'll shrink that there. Okay, I think you guys can see that. And we'll shrink this back down. That's a little bit better. Hit the thumbs up button. And okay, we'll start here. I got CNBC in the background if you can hear it. I don't know if you can hear it. Let me see. I guess there is a little bit. There we go. Okay. Let's hope the dogs don't wake up or anything happens. Okay. It is 8:30. Good morning. It is Thursday, May 4th. My apologies about yesterday. I had a travel day. I was on Frontier Airlines, and a very good experience on Frontier Airlines. Shout out to the crew from Atlanta to Trenton. I liked it. I was happy. Let's see. Today, by the way, Star Wars geeks, may the 4th be with you. May the 4th be with you. I'm going to try and turn that up a little bit. It is May 4th. I'm looking at quite a few things. Firstly, SPY. We had a 0.25 point rate hike yesterday. at this point, quarter point means nothing. I mean, don't be too freaked out. It does mean that Jay Powell is watching inflation. If inflation comes out and it's still hot, he's going to raise the F out of those rates still. So be careful. It goes back to sell in May and go away. There's a couple of things. Debt ceiling. You're hearing a lot about that. I personally don't think that anybody's going to let the country default. I think we've gone over this, and I think I've made it fairly public that my feeling on it is the Republicans' House, that they passed a kind of a common sense thing. Takes us back 1 year. It's not that big of a deal, but if the Democrats give in, they look weak, blah, blah, blah. I think at the end of the day, it's going to come out. It's going to be something, and you'll be fine. Bank issues. DPST is just getting absolutely destroyed. We still have small bank issues. Remember that we're one of the only countries in the world with multiple banks. The majority of the world has one bank, even or two banks or three banks. There's not a lot of banks out there. So we still have banking issues. Employment is still strong, which the Fed does not want. And the stock market is refusing to go down. So I would not be surprised. I think the market is expecting it to halt all of the rate hikes. I would not be surprised if we go up. That's just my personal opinion. I think there's, obviously they're data dependent. So if we have a strong inflation number and inflation is still at 5-6%, I think the Fed just continues to go up and says, as long as more things don't break, we're going to continue to hike. And so it all goes back to sell in May and go away. Maybe that's a good thing. We'll see. But the quarter point rate hike, it means nothing. Let's talk about, I'm going to talk about SPY, then I'll get to DPST and why I think Schwab is still a good buy, even though it's down at 47. Here is SPY. You're still in on the 4-hour algorithm. 415.47 was the buy. You're still in there. It's probably going to get you out. We talk about button hooks all the time. This is probably going to get you out. You had a 2% gain all the way to here. You could have gotten out even higher. I think we're in a trading range between 380 and 420. I think until we break 420, anytime you get close to 420, if you've got winners and they're trading stocks, meaning they're not investments, but they're trading stocks, get out. Simple as that. Simple as that. Identify in your portfolio. Again, if you've got 65 stocks, you can't manage 65 stocks. My top is about 25 to 30. Pick your stocks, have them in there. If you've got a full-time job, it's probably even less than 25. So identify good companies. Do not go into DPST and then you've got a Zoom meeting at 2 o'clock and all of a sudden DPST is down at 4. I said it yesterday in the private Facebook group. Hope and pray is a strategy that even I employ sometimes. Everybody does it. Emotions get into trades and you can't take them out. As much as you want to take them out, sometimes you just can't take them out. But emotions do get into trades, and we're all guilty of that. But SPY, you're still in. I just think you're going to get out. There's this gap down here between 398 and 395. I think you're heading for it. We've got the monthly numbers coming out this week for the month of April. So be aware that those numbers could greatly affect it. We've been seeing some companies like Qualcomm, which is in our core portfolio, which I said, great buy up here at 117. Well, you're at 104 right now. You're stretching this one. It's under its 200-day. I think at some point it gets back up to 121. They announced it last night, and they said cell phone demand is just not there. So boom, they're down 7% in pre-market at 104. I think if you can get this one under 100, I think it's a great company at under 100. I think this is like Apple in the 120s. But I do think when you get up near the 120s on this one, on Qualcomm, I think you may want to trim it. This is not an Apple. This is not one that I particularly hold for a very long time. I typically trade in and out of this one, but I do it on a long-term basis, on a 1-year basis. I don't currently own it. I haven't been looking to get into it because I do own AMD. I own and several other chip stocks. So, but Qualcomm is one that I have in the core portfolio because it honestly, it's probably one of the most consistent and most reliable chip stocks. If we take a look at a weekly on Qualcomm, you can see hasn't really, 110 to 170, and you're at the low there. This is COVID at 64. So ever since about March 8th, 2021, you've been kind of this range here. And I do think you're still in a downward trend on Qualcomm, but it's a good company. It's run well, and they've got good chips. So I think that's a good one for you. Let's go. That's just an example of stocks that have been pulling back because they're pulling back their earnings. One that, if you want to see one that I said, hey, buy under 40 after its last earnings, look at that. Last earnings, it dipped down. 41.31 was the buy-in on this one. You could have gotten it under 40. This day, March 2nd, my mother's birthday, John Bon Jovi's birthday, it wound up going under 40. And I said, if you can get this one under 40, this is great. It's going to cover this gap. Well, you know what it did today? They announced good earnings. They announced that they are cutting 20% of their workforce. Let me get to my Shopify notes. Surprise profit. So they made a profit and they're cutting 20% of their workforce. Well, it's covered this gap. It's going to open up at 54. So you missed that gap. This ascending wedge was there. This is in the core portfolio. You could have looked at it. I've made mention of it before. Your boy here owns it. I actually do. I believe I'm making a significant profit on it now. I was at a loss for quite a while until it dipped down here in the 40s. But now I'm probably making a profit. Another one that you want to look at that is earnings are coming up, Roblox. I said anything under 40 on this one. This one's starting to get confirmation here at 34. Their earnings are coming out on May 9th. So that's another one in the core portfolio that I think is a good one that you could get into. Now let's talk about SPY and how today is Apple earnings day. I mean, it's the Super Bowl. Let's just make it clear. It is absolutely 100% the Super Bowl of this quarter. Here's Apple versus SPY versus QQQ versus the Dow Jones DIA versus IWM. Apple is up 33% year to date. The Qs are up 20%, 19.97. SPY is up 7%. Dow Jones is up 0.87. And IWM, your small and mid caps, it is down 0.62. So one of two things has to happen. Apple has to come down to meet these others, or all of the others have to come up to meet Apple. Apple is driving this market. I mean, make no mistake, of that QQQ that's up 19%, that is a large part due to Apple. So their earnings today, I wouldn't expect much. I mean, let's take a look at the Apple chart. 165, I said if you wanted to trim it and you had long-term gains, 170 was the point. Yesterday, it hit 170. Its high was 170.76. So if you had a sell order in at 170, you probably made some money. Kudos to you guys. Remember, tip your bartender who told you to do that. But if you didn't, I don't think you're going to get too hurt in the long term. If this is one that you have in your portfolio for your long term, I don't think this earnings period is the one that brings it back down to the October lows, or I'm sorry, the December lows of 120. If we go back and we look at the October portion, that low was 140. I think you could see it come back down to 150s, which I would tell you get in, because with their WWDC conference, Worldwide Developers Conference, I think that's what it's called, in June, they're going to announce the headset. They're going to announce a new watch OS. They're going to announce new stuff. It's going to be probably a driver for this stock. They may announce something new on earnings today. They may announce something in regards to India that gets them a little bit more out of China, which is a good thing. So I think you've got those earnings that are coming up. And that's just an overall look at the market and an overall look at Apple, because Apple will drive the aftermarket today. If you think that Apple is going to just tank, buy SQQQ. Apple is driving that SQQQ trade. You could even go with one of the Apple. Let's Google this. Apple single levered stocks. Let's see. Apple single stock leverage. AAPU, AAPD. 1.5 times shares. It's levered. If you think it's going to go down on earnings today, AAPD. This has been to your detriment. You could use SQQQ as a way to play it as well. But look at that one. If you think that it's got to come up back up here to these 200, it's 1.5 times. So you could trade this one today if you think it's going to come down. I would rather see you, rather than sell Apple shares, maybe play AAPD if you think it's going to come down. Buy that one. So there's your look at Apple. There's your look at SPY. Let's talk about some of the bank stuff. DPST. There was somebody in the private Facebook group who said they were holding a large portion of DPST, thinking they would get back up to 7. My theory on this, it's more likely to get back to $5.50 than it is to get back to 7. Right now in pre-market, it is down 11, just 12%. This is a triple levered ETF. Do not just buy, hope, and pray this. This is one where you want to make sure that you have a stop loss. Typically for me, since my goal is always to make 10%, I'm willing to risk 5%. So I'll throw in and I'll say, okay, DPST, if I lose 5%, then I want to actually get out. If it's a hope and pray situation with a triple levered ETF, maybe I'll go to 10%. But if I go to 10% on the downside, I in my mind, I'm going to try and hold on for a 20% on the upside. But just remember, with any stock, and this isn't triple levered stocks, this is any stock, absolutely any stock. If you lose 50%, say a stock is trading at $100, and for some reason it goes to $50, well, you've lost 50%, and that hurts. But understand, it takes 100% to get back to even. That's why you don't want to fall in love with stocks, and you want to make sure that you understand your downside before you buy. Taking emotions out of trades is near impossible. It's one of the many reasons I have these algorithms in TrendSpider and that I subscribe to TrendSpider. The $400 a year doesn't bother me whatsoever, because you know what? If I didn't have TrendSpider and I didn't have these algorithms, quote unquote, to guide me, I would be probably having a lot more emotions in my trades than I am with the 4-hour algorithm or the 65-minute algorithm, and I wouldn't get out. I'd be spending a lot more than $400 on just the hope and pray strategy. So again, kind of a pitch. If you want TrendSpider, if you want these algorithms, if you want to try and get a little bit of motion out of your trade, the link is in the description with code DSP25, getting you 25% off. You could wait for one of their sales as well. As long as you're signed up under my code and I get you switched over, I'll give you my algorithms. I'll give you my watch lists. I'll give you the market scanners that I use every day to look at it. I'll give you the core portfolio. You can look at that so that you could see that how big Shopify is up today. It's up at 54.20. I think it's going to go to 56 at some point today, but any reaction in the market is an overreaction. But DPST, you're 12% down in pre-market. It's a bad situation. I wouldn't be putting my money into DPST. I think FAZ is the one. FAZ is the one that currently it's a 3 times levered financial bear. So as financials go down, this one goes up. April 24th, I had a buy-in at 2020, and right now you're trading at 22.89. So you've gotten you're 10%. So I would probably get out of FAZ, but again, that's the overall financial. DPST, I haven't been able to find a triple levered regional bank ETF that's a bear. DPST is a bull. So what do you do with financials? Schwab, I've said it before, Schwab has a $2 billion bank. It's almost a $100 billion a company. So a $2 billion bank won't take them down. But they're getting dragged down with everybody else. 47.28 it's trading right now, down almost 2%. I've said get in under 50. The CEO had buy-ins at 56, 58, somewhere in that neighborhood. The algorithm got you in at 57. It got you out with an 11% loss. Right now, the 4-hour algorithm does not have you in Schwab. It has lost its confirmation. Its ex-dividend date is May 11th. I would assume that this one has a chance to go back up, but the catalyst is just not there. Catalyst is all on the downside right now. I have not added to my Schwab since I bought it under 50. But I plan to. I think Schwab is a good bank. Like I said, if I wasn't with Fidelity, I would be with Schwab. Ones that I do own. Wells Fargo. Wells Fargo is one that I own, I think at about a $45 price point is my average purchase price. I don't own a lot of it. I think it might be 42. I think I bought it back here. I am holding this one for 1 year. That's my plan, to hold for 1 year and to do long-term capital gains on this one. But that's one that I own. Bank of America, another one that I own. I bought around 30. It's a 27. I'm going to add to this one. It's a good company. Good company. I think it's a $40 stock in a good market. Buffett owns this one. The other one that I think is a good bank and a good opportunity is Citibank. Again, none of these have confirmation, so I buy on the confirmation on the upside. But I do think that they're beaten down, and they're beaten down unnecessarily. So those are the stocks that I'm in. If you have other banks that you want to get into, JP Morgan, Goldman Sachs, I think you just wait for confirmation. I don't think that the banking system, as far as the large banks, is in danger. I think it's the regional banks that you could play, you could trade, but just realize that rug can come out of you pretty quickly. Talked about the mistakes that everyone makes. Hope and pray. I brought this one up the other day. And I'm no genius, but I kind of know what I'm doing. Sedge, I said, hey, buy it down here at 264, 270, somewhere in that neighborhood, because it's going to go back to 300, and I thought the earnings wouldn't be as bad as Enphase and other ones are. Yeah, your boy was right. It's at 293, up 11% in pre-market. And that yellow line that you see there, that's 300. If you buy under 300 and you sell over 300, all the way back here since November, 8 times you were in profit. 8 times. Short-term profits, so you're paying taxes on that one, but 8 times you were in profit. One that I want to alert you on that I don't have in the core portfolio, but it is a good company. Hold on one second. Sorry, I had to put the blanket over the dogs. Is Starbucks. Starbucks had their earnings. Really good quarter. Bad China. So Starbucks is almost under 100. It's trading at 103, 104. I think anywhere close to 100 is a good buy. Are you going to 120? I don't think so in the next couple of weeks, in the next month. This is one you just kind of hold on to. It's not super expensive. Let me see. It's PE. It's 36, 25. But it's a well-run company. I mean, if you go to Starbucks and you buy things at Starbucks, buy the stock. $5 cup of coffee. Yeah. I mean, you might as well buy the stock if you're buying the coffee. So that's one absolutely 100%. If you use the product, you buy the stock. I don't, so I don't own it. But I do think under 300, it's a good one. Estee Lauder, horrible quarter. You can see $1.37, $1.34, $1.54, and then 47 cents. This is China. It's 100% the fact that nobody's buying cosmetics in China because they weren't going out. as COVID, and they expected a big China. And so you saw this run up from 202 up to 250. They're back at 202. And you know, back in November was a good stock. I think it's a decent stock to buy here. I think it's an overreaction. We talk about it all the time. One of my favorite sayings is any reaction in the market is an overreaction. I think 202 is not bad. So I put that one down. Let's look at this. One that I didn't do, price. We're going to go back to coin market cap is where I look at it. PEPE coin. So PEPE coin is a meme stock coin, and it trades rather crazy. It's up at, let me see, this was less than $1 at certain points. Let me see. I guess it's at 12 cents. CoinGecko. PEPE coin hit an all-time high. Now, I don't want you to think that this is a good investment. This is 24 hours right there. Let's look at 14 days. Here's the price of PEPE coin to the US dollar. It's less than a penny, I think. I am not an expert in crypto. I know that my cousin is trading the hell out of this one. I know that last week there was somebody, or 2 weeks ago, who put $3,000 into this. They now have $3 million. Good luck in getting out of it. It is a huge market cap. In the last 24 hours, 587%. Or I'm sorry, in the last 7 days, 587%. In the last 7 days. So say you put $3,000 into PEPE coin. That's now $15,000. That's crazy. Crazy. So, PEPE coin, all-time high. There was a question about earnings whispers. And on the private Facebook group, I think it was Rohan, said, hey, if you know how to do this, I bring it up and I show it here a lot. Earningswhispers.com. I'm putting together kind of a PDF of websites and stuff. I'll probably sell it. Honest to God, I might just sell it for like $20. It'll be where I learned stocks, some videos that you can watch to learn some of the strategies that I know, and some of these websites that I tend to use. And it's just links. It's more information. But it's more about developing a strategy. And Rohan's strategy is going to earnings whispers and understanding the companies and what's reporting. Remember, typically doing any kind of earnings strategy, trading around earnings, it's gambling. No quote-unquote investor trades around earnings. This is all 100% catalysts. And so if you want to take the catalysts, it's good. Something like Apple, I'll take Apple as an example. They report after the bell today. Their earnings per share is expected to be $1.44. Revenue at $92 billion. Earnings Whispers tells you this. Once they report, Earnings Whispers puts something over here. We can go to the beginning, before the market. You can see Moderna was expected to lose $1.77. They made 19 cents. They were expected 1.18 billion. They made 1.86 billion. So it was a huge change. Now, when you go to Moderna stock, let's go over here to Moderna stock. They're up 2%. Why are the earnings that good and they're only up 2%? Probably guidance. So earnings, this doesn't give you the whole picture. You have to understand the company. And so typically what I'll do is I will go over here. I will find a company that I like Apple. I will find their earnings date and I will say, okay, what's the catalyst on this one? Where's it going? Is the product good? Is the management good? Blah, blah, blah. You can see Apple is expected to actually decline in growth. Not, again, if they announce a huge buyback, there's a lot that could go up there. You look at Shopify. We went over Shopify already. They're up, 17%? Yeah, 17.8% at 54.53. They pre-announced, it seems. So, could you played earnings whispers and said, ooh, Shopify is reporting. Ooh, Square is reporting. Ooh, Coin is reporting. DraftKings is reporting. Look at the charts. We'll go and look at Coin. Coin has other issues. Remember, this is one that could be in a regulatory issue phase because while they're the leading in cryptocurrency as far as exchanges, they've said they might not want to be in the U.S. They may be moving offshore just because the U.S. refuses to regulate them and give them clarity. So you've got this descending, it's got no confirmation. Would I bet on Coin as far as earnings go? No, they're not making money. You can see minus 246. You go over here, FinViz, and you type in Coin. So there's a strategy there. I think Rohan's strategy of going to earnings whispers, understanding it, then going to FinViz, understanding the company, understanding the products, understanding the risk. I think it's a good strategy. His strategy has worked out. But the PDF that I'm working on is developing a strategy. It's more about, hey, here's my strategy. Go and develop your own. Square. Take a look at Square. They report after the bell. It's called Block. I got to continue to call it. You're out of it as far as the 4-hour algorithm goes. Am I putting more money into Square? You got a gap up here. You're below the 200-day. I kind of expect them to, blow earnings again. You can see 42 cents per share, 22 cents per share. I use the Cash App. I like it. It's one of my favorites, them and Venmo. So I have both PayPal and Square. I own both stocks. I own Square. I'm not playing it around earnings. I just own it. So that's a good strategy, but it is earningswhispers.com. You can just Google it. Go and use it yourself. Top, TOP. I'm going to switch you over here to Active Trader Pro. TOP, this is a short squeeze, and we're going to look at a 5-day chart here on Active Trader Pro, and you'll see this was the day it went crazy. This was the day it went up to $240. And we could probably, you know what? I'm going to drag this back. We're going to take a look. This is the pre-market, or I'm sorry, aftermarket and pre-market where it hit 240. Then it kind of came down here to 60. It hit 240 again. And now it's just settling in. Well, it's got more of a rise. This is a traditional short squeeze. Yesterday, you traded between $53 and $93. Today, in pre-market, it's at $91. So TOP, it could be a rug pull if you decide to get in there. So get in there. Use the 65-minute algorithm. If we go over here and we go TOP, and then I go to this 65-minute algorithm and I run this. And this is ignore the previous stuff until it got here crazy. It got you in at 685, okay, here on April 26th on the 65-minute. All of a sudden, it gets you out here with a 952%, 10 times. Say you put $1,000 into this. All of a sudden, hold on, where's my phone? Let's see. Let's do this. What's 1,000 times 1,000%?
It's 10,000.
Yeah, 10,000. So you went from $1,000 to $10,000. And yeah, your boy is not good at math. So I had to use the phone for that one. Thank you, Siri. Thank you, Apple. Yeah. So top, it just got you in at 78. Are we expecting it to go up from there? Well, if you got in at 78 on May 3rd, and all of a sudden now you're at 91, take your profit. Take your profit. Don't be greedy. The rug pulls are real. But top is one. It's in a short squeeze. Dakota from the Facebook group wants me to look at Wix. And let me read Dakota's. Dakota says, I'm looking at Wix today. It appears oversold to me. Any opinion? Benzinga has a decent article, came out today on it. I'm in at 79, hoping to sell around 90, even though their optimistic figures put it around $100 per share. Hey, perfect. Dakota, I have an entry price. I have an exit price. I think that it's there. Some Bazinga article puts it at 100. Rule number 1, don't listen to anybody on the internet, even if they write an article. Here's what I see. I'm going to look at it on the 4-hour algorithm. And 4-hour algorithm, it has you out right now. It got you in at 89, 88, 91. Got you out with a 5% loss, and it's hugely down. It is not quite, I mean, the RSI is at 22, so it is oversold, but you don't have confirmation. My only fear is that 9-day down there. There's a reason this one goes down, and most likely it's news-driven, but take a look at the 50 days moving down. The 200 is still kind of flat. The 200's up at 87. I don't think that's a bad price target up there in the 90s. I think if you got in at 75 and you're looking at about 90, you're just looking to get back over the 200-day. So from a chart perspective, I don't think that it's bad. I just think that you haven't you don't have confirmation. And since you're not over the 9-day, you have nothing short. Right now, they're not earning money. Their income is they lose $424 million. They have a $4 billion market cap. Cash per share, they have $18 per share available. So if they're losing $3 per share, they probably have a couple of quarters left. But here, this is good. May 4th, Raymond James market outperformed, $96 price target. The average price target is 107. So you're right. Year to date, they're down 1%. Over 1 year, they're down 5%. My question, they're a website hosting company. I just particularly know that one. But my question to you is, do you use them? Do you understand their business? If you don't, I would say, hey, be aware, because again, the stock doesn't have confirmation. Using their business is a great understanding how to do it. There's no insider trading. It's a cloud-based platform that enables to create a website. Yeah, it's a website creator, hoster, and they have platforms. There's an investing.com article. Uber stock burns rubber. Why Fiverr, Upwork, and Wix were all falling today. Here's a Motley Fool article. Why they were falling. Let me read why Wix is falling. Usually they have this outline. Shares of Fiverr, Upwork, and Wix all fell for the second day in a row. Continued to respond to threat of ChatGPT. That is true. Good call by Motley Fool on this one. So the Chegg guy came out. I saw the interview with Chegg, and he said the fear of ChatGPT is overhyped, but they particularly did attribute a decline in Chegg sales to ChatGPT. Now, it's a little bit different, but I think Wix is in that category. So I would be careful because I do think that the AI hype could come for Wix, just like that article says. Take a look at it. Understand why ChatGPT is a threat to that. But I wouldn't just buy it because it's down. I would be buying if you use the product, if you like the product. My guidance to you would be try and build a website on ChatGPT. It's easy. I got to tell you, it is so simple. So that's one, Dakota, I hope you hit 100 on that one. I'd just be worried about that one. Just because the RSI is at 22 and it is oversold, you have to use other things, and mainly the macro of that one would scare me, because if for some reason Wix is down because of ChatGPT, their earnings are coming up, or if they announce on May 16th some type of slowdown, you could probably see this one fall more significantly. If we look at a long term on this one, look, you broke your ascending wedge. You're well under your 200-day. That's a weekly. If we go to a daily, you're looking even weaker. So I'd be a little bit careful. Their earnings are coming up. Here's the good news for you if you are gambling. If you take your stop loss, I would probably, if you get down below, I would say 68, 67, that's a 10% down there. I would probably look maybe even at a 5% stop on that one. But I would, if you're thinking that they're going to announce some type of good earnings, I'd trim at least half at the 5% loss, just to kind of protect your capital a little bit. So I was online and I was on FinViz and I was on the front page and I was looking at insider buys. This was on live right before. And I was just looking and Franklin Resources, Enphase, and American Assets Trust. Big insider buys. Then I was looking down at the sales. Let's take a look at these. The first one is Ben, B-E-N. This is a financial company, Ben Franklin Resources. And their stock price is at $25.14. We can go over here to TrendSpider and take a look at their on the 4-hour algorithm. You're out. They just announced earnings. You're out. Doesn't look real super great. It's like every other financial. I wouldn't put a lot into this, but then you scroll down here. But let's see. The average target price is 24, and they're trading at 25. So you look at this. There was a $25 million buy by an affiliate just this week. The cost, though, $10.14. So always take a look at that cost. They're trading at 25. If you offered me $25 million of shares in this company for $10, of course I'd buy it. So take a look at that one. Enphase had a big buy. This is the second big buy. This is a solar company. They announced kind of slowdown in earnings, blah, blah, blah. It hasn't been good. And that's just because the past 4 or 5 years have been fantastic. The PE is 45. It's not super high historically for this company. They're down 41% year to date. Its average target price is $265. It's trading for $155. You go down here and you look at the buys and you have $10 million at about $166. You have a VP buying $500,000 at $156. $166 was the $10 million by Thurman Rogers, who's a director in the company. I'm a big believer in this one. I think that it's just been beaten down. When we take a look at Enphase here, I'll show you from a long-term standpoint. You can see ever since their earnings, it's just been a nightmare. I mean, you were up at 219. You're at 155. You want to talk about beaten down. Dakota, Wix, I would rather put my money in Enphase than Wix, just perfectly. Honestly, I'm a big believer in solar, so I'm probably a little naive in this one from a Wix standpoint. But take a look at this. So this stock just, 3 years ago, 4 years ago? Let's look at 5 years ago. 5 years ago, it was $1.95. $2. Let's just say $2. Let's say you put $10,000 into this at $2 a share. $10,000 is what? Close to $1 million now? 100,000, somewhere in that neighborhood. I don't know. I can't do the math. But at 155, you're butting up all-time highs at about 360. Let's look at the range here. 128 is the 52-week low. 339 is the 52-week high. You're 54% off your 52-week high. So Enphase, and that's a big insider buy. Let's look at the other one that I wanted to look at is Airbnb. Because Airbnb, I don't know anybody who hasn't used Airbnb. I've used it many times. P is 42. It's expensive. Target price is 138. You're trading at 118. Well, your boy, Joseph Gebbia, who's a director, I think he's one of the founders. I don't know. He just sold $40 million of stock at 114. Doesn't put a lot of, confidence in me that this is a good product here or a good, service that I think it's going to be run well. If he's selling that amount of money, he's probably putting a pool in his backyard. But yeah, Airbnb 113. Let's look at some scans. SPXU. This is a triple levered ultra pro, triple levered short of the S&P. Buy-in 1342. Right now you're at 1382. I've said we're in this trading range at 420. Right now the S&P is at 4090. So I don't think it's a bad thing to get a triple levered ETF if you think that we're going down. SPXU, it goes with sell in May and go away. If you think that we're going short, SPXU is one. SDS, let's look at SDS. This is a ultra short S&P 500. This is 3986. Remember, there's a bunch of these. This is just ones that I've traded. HIBS, HIBS is one. This is a high beta bear 3 times. And this one is a secondary cross up here at 592. This one, you got a 540 and you're at 592. It's a secondary cross up. This is not a triple levered, but this might as well be a triple levered bear. Zoom, your earnings are coming up. They're coming up on May 22nd. And Zoom has a cross up here at 6143. We talk about confirmation. See that green line? That's the 9-day EMA. The confirmation is typically over that. When you get stuff like this, Zoom is still expensive. I mean, make no mistake about it. This is a company that was a $400 stock. Their forward PE is 13. They make an income of $103 million. They have a $17 billion market cap, down 10% year to date. This is a company with lost direction. I don't believe in it. It's a cross up. Zoom is one if you want to buy it. ETHE is the final one. This is the Grayscale Bitcoin, not Grayscale Ethereum Trust. $9.08. Right now it's trading at $9.14. So $9.08 is the buy-in. Yeah. There's your scans. I will be back tomorrow with a recap. My apologies for yesterday. I thought my flight was at 4 o'clock, but it wound up being at 11 o'clock in the morning. And if you know Atlanta Airport, you know I had to get there like 3 hours early. Sponsors, Visible. If you're paying more than $30 a month for your phone bill, there's a link down below. If you have an eSIM, you can try it. The link down below saves you $20 off your first month. I think they still have a $5 a month discount, so it's like $25 a month. That's what I'm currently paying, and it's ongoing. But $25 a month, $20 saves you off your first month. It's $5. If you have eSIM, just try it out. It makes no sense not to try it out. Get an eSIM, get a new number. Then if you like it, just transfer your number over. So nice. If you're paying more than $20 a month. And everybody on YouTube, I will look at your stocks in a second. Next sponsor, TrendSpider. You see it on the screen. I mean, you know, if you listen to my podcast, this is the first time this is TrendSpider. My algorithm shows you entries, shows you exits, shows you performance. This particular ETHE, it loses you 42%, the algorithm does. But you know what? If you just bought and held the stock over 2 years, you're losing 75%. So on an upward trending stock like Apple, on a bull stock, over 2 years, you've made 30% on Apple. But if you used my algorithm, you made 45%. So this is TrendSpider. It is the link is down below. DSP25. I give you access to my 4-hour algorithm. I give you access to my 65-minute, which is a day trading algorithm. I also give you access to watch lists, market scanners, everything that I have, you'll have. Your screen will look exactly like mine if you set it up that way. You could even do your own. Trust me. TrendSpider, once you get into it, you develop your own strategies. Okay, I will see you guys tomorrow. Have a great one. Stop. There we go. Okay. Let me export this real quick. Share, export, and then, Perry, I'll look Expedia. Hilton looked good this morning as far as what I could see. Travel stocks look... Here's Expedia on the 4-hour. It just got you out right before earnings. Are earnings coming out tomorrow? Today, after. So see the descending wedge here? I mean, it was clear at 177 Expedia was tough. And it's probably because of its... I use Expedia. I love it. But the PE is 42. I mean, that's huge for a travel company. Specifically a cyclical. Down 48% year to date, up 3%. Average price target is 131. You're trading at 90. Most recent analyst, Oppenheimer, with an outperform 120. Insiders look like they're selling at about 106, 107. Here's, Perry, if you're still there, here's my take on Expedia. If you use this service, it's probably not a bad risk. If you don't use Expedia, or if you bargain basement shop, I should say, it's probably not a good... I mean, this went up to the 200 level based on all of the travel hype. What I'd rather see you in than Expedia, you could probably get back up to the 200 day, which is 124, which would, listen, that's almost a 50% gain. That'd be fantastic. The problem that you have is I think that the AMX, I think it's American Express. AXP. If you're going to invest in travel, I'd rather see you in AXP, American Express. I think this one has the more likely it's a 180 stock from 150. It's not going to move like Expedia. If Expedia starts blowing things out of the water on earnings and stuff, and I would read these articles on it, what you should know. Don't look at the Zach stuff. Look at, there's a bull market in the travel industry by Airbnb. This is one that probably mentions Expedia. Let's see. Come on, where's Expedia? While large online companies, agencies like Booking Holdings and Expedia were asleep at the wheel, Airbnb first emerged on the scene in 2007. They were awake now. So it just mentions it. I would take a look at those articles. I use Expedia, but I'm not about to invest in Expedia. And it's not a mark on the company. It's just, I bargain shop. And Expedia is just one of the places I go. And when I book flights, I use Google Flights. I like the interface a lot more. So that's Expedia. TD Bank, they just called off their deal. Let me see. What's TD Bank's symbol? Let me look it up. What's the symbol, William? Is it Toronto Dominion Bank? TD? Is that the one you're looking at? Yeah. First Horizon, that's it. Toronto Dominion Bank. What are they doing in pre-market? They're flat. Banks are tough, man. See, the PE's 9. It's a Toronto bank, so it's Canadian, so it's not wrapped up in our stuff. But I'd rather see you in Bank of America. I'd rather see you in Wells Fargo, even though Wells Fargo has a higher PE. Citigroup, Citigroup has a PE of 6, dividend of 4.47, target price of 58, and you're trading at 45. Hey, VRO. Good morning, Cherry. Good morning, Larry. I I mean, banks are just tough. I stick with the big ones, and I stick with U.S. banks. I don't go outside of the U.S., and the only reason I don't go outside of the U.S. is just it's more I know the U.S. And, listen, that could be dumb. Your boy ain't a genius. I'm smart sometimes, but I ain't no genius. Let's look at Top. Did Top get halted, or just did my Active Trader Pro stop working? I never know. Brian, that is a question that I probably can't answer. So coins are one thing. Coins are traded on specific, like Coinbase will determine which coins they actually allow to trade on their platform. It's just the same thing. It's like, for instance, my 401k, when my company Earthlink got sold to a private equity group, and my 401k was at Merrill Lynch, and Merrill Lynch offered me what they offered me, like $5,000 or $10,000 to keep my 401k with Merrill Lynch, and I agreed to it, and I had to keep it there for at least a year. But it was a self-directed IRA. So I started buying stuff, and this was 2019. And I wanted to buy the ARK funds. And I said to Merrill Lynch, okay, I'm going to buy a bunch of the ARK funds. And I went into their platform and tried to type in ARK, and they didn't list ARK. And so I called my advisor and I said, listen, I know you guys just gave me money, but I can't buy ARK. And the guy tells me, well, we don't allow our people to trade in ARK because we think it's too dangerous. It's too volatile, is what they told me. And I said, have you seen the 5-year chart on ARK? I said, it's pretty good. And then all of a sudden, 2020 and 2021. 2021, they were right. 2020, I think it was the best ETF out there. But yeah, it is 100%. So one of the things that I do know about brokerage houses is that if they allow a stock to trade, they have to buy that stock. So say, for instance, like when Uber went IPO, Uber went to Fidelity and to Merrill Lynch and to all of those brokerage houses and said, okay, we're going to allocate this amount of stock to you, and you can buy it at this price. Yeah. Brian, it's not. It's it's part of why you go to the NASDAQ, to the New York Exchange, and it's part of why penny stocks sometimes, you can trade them on Webull and Robinhood, but you can't trade them on more reputable platforms. And part of that is because people ask for it. Part of it is, and people want to trade on it. Specifically, I know like GBTC is a good example, the Greystone Bitcoin Trust. It took on Fidelity 20 minutes to complete an order back in 2017. Whereas TD Ameritrade, I remember I was trading on there, and it took them less than 10 seconds to complete the order when it was a limit order. And it was trading at that price. And Fidelity called up Fidelity, and they told me, yeah, it's just a matter of matching a buyer with a seller. So, Brian, if you haven't figured out, it's a rigged game. We're just pawns in the rigged game. We're not the big guys. We're the small guys. The big guys are where, a couple $1 million means nothing. They're putting a pool in the backyard. So, yeah, if my suggestion would be to kind of Google that kind of stuff, because I may be wrong, but usually my explanation comes from personal experience. So, and with that, I'm going to go because I think my dogs One of my dogs may need to poop. They're super quiet. You know what? Screw it. I'm going to move you over to Active Trader Pro, and then I'm going to upload this puppy. New episode. Browse. I'm going to at least upload the podcast. Upload. And we're going to add in a trend. I want swapping tubes today. Should I come back on live this afternoon for Apple earnings? Maybe I should. Maybe I'll do a special live episode after hours. Yeah, I will be on tomorrow, Sherry. I should be. I will. I'm doing standing desk today. Not a standing desk. I'll take a picture. Maybe I'll post it. Sherry doesn't have social media, so. By the way, Sherry, what was it yesterday? Hold on. Let's go into the Facebook group. Brandon mentioned you in our Facebook group yesterday, Sherry. I don't know why. I think I said that you don't have. I forget what he said. I don't know. I don't like posting people's Facebook stuff on here. Oh, I wasn't even showing you guys that. Okay, let's see. Save episode. Title is going to be Apple earnings preview, PEPE coin, and what else did I talk about? And insider trading market update 5/4/23. It's Britney bitch, Sherry. We call him Britney bitch. Let's see. I've got to go and dashboard episodes. Let's see. We're going to copy the top part. I can't believe PEPE coin, man. My cousin will send me. Because I tell her, get the hell out of PEPE coin. And she'll send me a text. Haha, told you. She's all in on Web3 and stuff. Super, super smart girl. Coin went nuts again. Apple earnings preview. What else did I? Oh, Shopify. Shop went nuts. Thought it would. Is it SEDG? Would. You have to rewind. I'll post the actual video of just the podcast, Sherry. I've been doing that lately. I'm going to post this. Publish now. We'll publish that. And I'm going to upload. I got to do. Okay, it's 9:30. I'm going to get out of here. And I am going to I'll be back on tomorrow, and I might be on tonight. But if you guys aren't subscribed, hit the thumbs up button, by the way. But if you guys aren't subscribed, subscribe and hit the notification. So if I go live tonight with Apple earnings, you guys will be on. We can kind of trade that around that one, because there's a lot of earnings tonight. Let's see. Earnings Whisper. Let's bring you back over to Safari. You got Apple, Shopify pre-announced. You got Block, Coin, DraftKings, Carvana, Lyft, DoorDash, Booking, Expedia, like I just talked about, Fortinet, Team, EOG, Dropbox, Monster Beverage, which is a good one to trade, Open Door, which is a Chamath, I think, SPAC, Bumble, Rocket Companies, which is mortgages, AIG. Let's see. So we started the day down. I don't want First Horizon. First Horizon is down. Wow. First Horizon is down after they announced that they're halting that deal. They're down 37%. PAC-W is down. Oh, it's halted. 41%. PAC-W is getting taken over. It's done. Let's look at DPST. I need to move you back over to Active Trader Pro. 425. It's down 11%. One of our favorites, Boyle, is down 1%. Paramount Global, they pre-announced some stuff about users. That's why you're seeing that one. Let's see. By the way, I love Active Trader Pro if you guys don't have it. Reported first quarter revenue decline of 1% year over year. Total global viewing hours across Paramount Plus and Pluto increased by 50% year over year. Added 4.1 million subscribers in the quarter, bringing Paramount's total subscribers to 60 million. Pluto TV grew to active monthly users of 80 million. I just, I don't subscribe to Paramount Global, so I'm not a... WBD is one. This is Warner Brothers. This is HBO Max. This is down 3%. Netflix. Talk about Netflix all the time. This is slightly up. Nothing crazy. Let's look at Top. Top is going to go nuts. Top is at 94. Jesus. I think it's halted. It hasn't opened up yet. There we go. Now it's open. Wow. Phew. Okay. I don't know if you can hear it. Dogs are snoring. Okay, I'm out. I'll upload the YouTube video in a little bit, but the podcast is up. So it is up. Let me just make sure it populated on. Did it populate on Spotify yet? Let's see. It populated on Spotify. Woohoo! It's 44 minutes long. Okay. I will see you guys tomorrow.